Welcome back to BestProp4U. Today we are diving into the British pound. The GBP is showing strong resilience, currently trading near a 3-week high after a strong bounce from the 131.40 level that we saw back in late June. The question we're here to answer, of course not answer, we're going to see whether that's the case, of course, going forward, whether this is to be considered a double bottom or not, because the end of the flag pattern here potentially could take us all the way up to 136.60, and this is the medium-term opportunity that we want to multi-time frame analyze and understand the odds of getting up to that level. This is of course a strength given the sort of political turmoil in the UK, with Prime Minister Keir Starmer announcing his resignation, and that triggered a leadership concept. A Greater Manchester Mayor Andy Burnham is the front runner to replace him and is expected to name former Energy Minister Miliband as his Finance Minister. The fact that sterling hasn't crashed actually suggests that the market has already priced in this political chaos. So the pound is being driven by BOE instead, with oil prices around 72, 73 after the Strait of Hormuz attacks. Inflation concerns are roaring back. Markets are now actually pricing about a 76% chance of a rate hike by the end of the year for the BOE, and a 50% probability of a hike as early as November. Andrew Bailey today also stated that inflation will take longer to hit the 2% target and explicitly ruled out near-term rate cuts. He also warned of a potential sharp correction though in equity markets. So let's just into the charts to see how this translates from a technical perspective as well. Now, we did talk about this initially. A potential double bottom here could be forming, and the neckline would be at 136.60, but can we get there? What are the levels that we need to pay attention to, and whether these are price action based or Bollinger Bands? Well, initially, of course, we're looking at 135. This is not just a psychological level that we saw being rejected at the end of May, also at the upper Bollinger Band, and also a strong psychological level, right? So this is very important for context. If bulls can break 135, that would open the door to the, let's say, macro target at 136.69, which again, I repeat, would be the range, or let's consider the neckline of the potential double bottom here, with a false break, of course, that is. So breaking that could essentially drive another leg equal to as many pips as this range is, and that would, in the macro level, bring us up above 141. So that would be a very nice trade for Q3, perhaps even Q4, who knows. But as always, we're not just looking at the price action. We want to confirm with different indicators. We do see the RSI showing some sort of bullish divergence, although the two troughs are far from one another. You see we have made a new low, but we didn't make a new low on the RSI. This is a bit of long-term sort of signal, however, which, of course, the longer the two troughs or points are on the RSI, the less relevant the signal becomes. And that's why, of course, it becomes quite important, as always, to do MTFA, multi-time frame analysis. Going down on the 4-hour, we want to see what is really happening here. We do see a signal here down at the 131.50 or so, a level that has provided this bounce to the 134, which we saw earlier today, initial rejection. But at the same time, let's not forget that we do currently see an opposite signal to the downside as well, and this could be an indication of a potential pullback. Now, pullbacks at this level, because we're looking at a potential end of an initial 5-wave move here, typically come and do a form a double bottom at the previous trough, and in this case that would be around 133.30. Okay, the interesting thing that we do see here is that the Bollinger Bands, all of them are looking up, and the upper Bollinger Band is looking like it's leaning towards the center. And this is exactly what suggests the potential pullback rather than a correction or a dip. At the same level, at the same time, let's not forget that if we assume that this is a finished move to the upside, that will be around the 23.6 or perhaps in the 38. So we could go as low as 133 if this is a short-term short play. But I don't think we would go below the 50%, which is at 132.70, or below the lower Bollinger Band at 132.83. Let's not also forget that structurally speaking, we could be looking at potential cup and handle here, and that could be an opportunity to go long at the same time, right? So if that were the case, we would be looking for this to be the cup, and that would be the handle, and this is a rejection, making the rim of the cup and handle a support. So 133.71, although it might not be looking like as an important level for you at the moment, given that it sits in the middle of nowhere, it's far from the middle line at 133.50, far from the peak and far from the lower band as well. But well, look, contextually here, this is important for the cup and handle opportunity. However, let's not forget that that might not be completed yet, okay? And we could see actually this continue all the way up to 134.60, and this would essentially create a much better cup and handle scenario, assuming this would be of course a double top potentially as well, assuming of course then we do go into a pullback to create the handle. That would be a bit more of a grinding for a few perhaps days or weeks, but essentially we want prices to remain above 133.30 for this to continue being a potential cup and handle, because typically cup and handles don't really correct below the 0.38 of the entire cup, and that would bring us to 133.40. So with that context now also out the way, and of course a lot to consider here for the pound, but since we don't look at the pound often, that is okay. Let's go down to the 1 hour chart to see what actually is there. On the 1 hour chart, what we do see is we see consecutive breakouts following periods of consolidation. We consolidated, we broke higher, we consolidated, we broke higher. In this particular case, we saw divergence. In this particular case, we see divergence. So we are currently just testing the middle Bollinger Band, I would say. At the same time, though, let's not forget that the two bands, the outer bands, are tightening, are narrowing, and this typically is an indication of potential breakout. The question is this going to be a breakout or a breakdown? We have had one and then second leg to the upside. If we do see a breakdown, then essentially we could go all the way down to 133.27, and once we do see a rejection here, we could start considering long positions. If we actually manage to stay above 133.60, the lower Bollinger Band, then we could be looking for another leg to the upside, breaking above 134 and essentially targeting higher levels. But for now, if we see a short-term pullback toward the low 1 hour band, then we could essentially retest the 133.30 low. The reality is that as long as the 1 hour median line holds, the bias remains bullish for further upside. However, the bands are tightening, as I said, significantly here, and indicates a consolidation phase before the next move. Watch the 133.80, which is the median line, as I said before, and if it holds, look for a squeeze up to 134.60. So trade safe and keep an eye on UK political headlines.